Okay, students, let us continue some few problems in case of incorporating entries. Journalize the following transactions in the books of head office. So we need to pass journal entries in the books of head office. Okay, head office paid branch commission 55,000. So journal entry for this will be commission account debit to bank, because commission is paid, it's an expense, debit all expenses and losses, and cash is going out. So therefore you write to bank. So it's commission account debit to bank. Branch office paid 10,000 to HO creditor. Head office creditor is not paid by head office, it is paid by branch office. So creditor is a receiver, branch is a giver. So it is head office creditor account debit to bank. Creditor receiver, branch giver. So head office creditor account debit to branch. Branch collected 60,000 from head office debtor. So branch have received from debtor. So debtor is a giver, branch is a receiver. So branch account debit to head office debtor. Cash sent by the branch to head office 30,000 still in transit. So it's called cash in transit. So it's called cash in transit account debit to branch. Next, goods sent by head office to branch 45,000 still in transit. It's called goods in transit. So journal entry for this will be goods in transit account debit to branch. So commission account debit to bank students. Commission is an expense, cash is going out, commission account debit to bank. Second one, creditor is a receiver, branch is a giver. Third one, branch is a receiver, debtor is a giver. Fourth one, cash and transit account debit to bank. Fifth one, goods and transit account debit to branch. Next, students, fifth one, give journal entry for the following transactions in the books of head office. The books are closed on 31st December 2018. Goods sent by head office on 28th December 2018 worth rupees 1,500 to its Shimoga branch, not received by the branch up to December. So it's called goods in transit. So what's a journal entry for goods in transit? Goods in transit account debit to branch account. That is goods in transit account debit to Shimoga branch account. Goods sent by Davangere branch to Shimoga branch 3,000 are yet to be recorded. So it's a transfer of goods from Davangere to Shimoga. Shimoga is a receiving branch, Davangere is a giving branch. So Shimoga branch account debit to Davangere branch. Third, Shimoga branch paid 30,000 for machinery purchased by head office. So machinery is purchased, debit what comes in, machinery account debit to Shimoga branch, because Shimoga branch has paid, credit the giver. Davangere branch paid 1,000 rupee dividend to a local shareholder on behalf of head office. So dividend is paid, it's an expense, debit all expenses and losses, and Davangere branch is a giver, credit the giver. So it's dividend account debit to Davangere branch account. Next, provide 10% depreciation on furniture when Shimoga branch furniture is maintained in head office account. So depreciation will be 2,600 because the furniture book value is 26,000. So 26,000 into 10%, you get 2,600 as depreciation. So it will be branch account debit to depreciation on furniture account. So go first journal entry students, goods in transit account debit to Shimoga branch. Shimoga branch account debit to Davangere branch, receiving branch debit, giving branch credit. Machinery account debit to Shimoga branch, machinery is purchased, debit what comes in, and it is paid by Shimoga branch, credit the giver. Dividend account debit to Davangere branch, dividend is an expense and Davangere is a payer, credit the giver. Depreciation account debit to furniture, depreciation is an expense, debit all expenses and losses. to furniture. So whenever furniture is reduced, you need to credit. So 2010 question paper students. Head office at KGF has branches at Kolar and Mulbagal. Give entries in the head office books to adjust the following. Assuming that books are closed on 31st March. Expenses paid 4,800 to be charged to Mulbagal branch for the work done on its behalf by head office. So it's an expense to Mulbagal branch and it is paid by head office. We are passing journal entries in the books of head office. So it's an expense for Mulbagal branch. So Mulbagal branch account debit to bank. So branch, it's an expense, debit all expenses and losses, and it is paid by head office, cash goes out. So journal entry will be Mulbagal branch account debit to bank. Next, second one, Kolar branch paid 3,600 as salary to visiting head office official, and the branch has debited the amount to salaries account. So Kolar branch has paid salary. Salary is an expense. So salary account debit to Kolar branch account because it is paid by Kolar branch, credit the giver. Depreciation at 10% per annum is to be charged on furniture at Kolar costing rupees 10,000, the account of which is in the books of head office. So depreciation is 10% on 10,000. So 10,000 into 10% you get 1,000. Journal entry for this will be depreciation account debit to furniture account. Goods costing rupees 2,400 purchased by head office from Royal Marketing, but payment is made by Kolar branch account. So Kolar branch has paid, credit the giver. So purchases debit what comes in. Purchases account debit to Kolar branch account. A remittance of 3,750 made by Mulbagal branch to head office on 28th March was received by head office on 2nd April. This is called cash in transit. So journal entry will be cash in transit account debit to Mulbagal branch account. So first is Mulbagal branch account debit to bank because it is an expense of Mulbagal branch. So Mulbagal branch expense account debit to bank. Salary account debit to Kolar branch account because salary is an expense, debit all expenses and losses. Kolar branch is a giver, credit the giver. Depreciation account debit to furniture. So depreciation is an expense, debit all expenses and losses. It's on furniture. Purchases account debit to Kolar branch. So purchase debit what comes in, you are purchasing the goods. So purchase account debit to Kolar branch account because Kolar branch is a giver. Cash and transit account debit to branch account.